Hello, everyone. Welcome to the market opening bell on Tuesday, March 18. On Monday, the State Council Information Office held a press conference to interpret the special action plan to boost consumption recently issued by the General Office of the CPC Central Committee and the General Office of the State Council. The plan outlines 8 key areas with 30 specific tasks. Coupled with better than expected data from China's three key drivers investment, industrial output, and retail sales, this fueled a continued rise in Hong Kong stocks. The Hang Seng Index opened 266 points higher, peaking at 24,352 with a gain of 392 points and closed up 186 points or 0.8% at 24,146. The H-share index rose 50 points or 0.6% to 8,928, while the Hang Seng Tech Index fell 7 points or 0.1% to 5,872. The total market turnover for today was 244.8 billion Hong Kong dollars. Mainland Chinese markets rose but later pulled back. The Shanghai Composite Index hit the high of 3,436 and closed at 3,426, up 7 points or 0.2%, while the Shenzhen Component Index peaked at 11,015 but closed at 10,957, down 21 points or 0.2%. The combined turnover of the two markets was 1.5729 trillion yuan, down 218.8 billion yuan from the previous day. The renminbi US dollar midpoint rate rose 50 basis points to 7.1688. What are the new highlights of the special action plan to boost consumption? Previous consumption policies largely focused on the supply side, emphasizing supply driven demand creation. This time, the plan places greater emphasis on the demand side. How will it be implemented? Relevant departments are studying policies in taxation, commerce, and finance to promote consumption. For instance, the National Health Commission is drafting specific operational plans for childcare subsidies, alongside other measures like expanding the use of housing provident funds and initiatives to enhance skills and income for low income rural populations. Boosting consumption requires financial support, and the plan explicitly calls for leveraging fiscal policy to guide and drive efforts while strengthening credit support. It also outlines actions for upgrading bulk consumption and enhancing consumption quality, focusing on 4 areas: goods consumption, service consumption, new consumption models, and consumption scenarios, by launching 4 major consumption expansion projects. Next steps include organizing pilot reforms in automobile circulation and consumption, encouraging regions with the capacity to take the lead in promoting efficient second-hand car circulation and developing the auto aftermarket, aiming to foster new growth in auto consumption. Additionally, in collaboration with relevant departments, policies will be refined to support household services, tourism, digital consumption, and sports consumption. Improving residents' consumption capacity is fundamental to boosting consumption, and the plan prioritizes the action to promote income growth for urban and rural residents, deploying multiple policy measures. On the economic data front, the National Bureau of Statistics reported that fixed asset investment in the first 2 months of the year grew by 4.1% year on year, accelerating by 0.9 percentage points compared to the full year of 2024, beating market expectations of 3.2%. Industrial value added output of enterprises above a designated size rose 5.9% year on year in the first 2 months, up 0.1 percentage points from 2024's full year figure and exceeding market expectations of 5.3%, indicating robust industrial growth. Retail sales from January to February increased by 4% year on year, surpassing the previous 3.7% market forecast of 3.8%. However, China's unemployment rate in February rose to 5.4%, up from 5.1% previously, and above the expected 5.1%. Earnings highlights: Wuxi AppTec for 2024 revenue was 39.241 billion yuan, down 2.7% year on year. Though excluding COVID-related commercial projects, it grew by 5.2%. Net profit was 9.353 billion yuan, down 12.5% with earnings per share at 3.24 yuan. A final dividend of 9.8169 yuan per 10 shares was proposed, along with a special dividend of 3.5 yuan per 10 shares. China Tower for 2024 operating revenue reached 97.772 2 billion yuan, up 4% year-on-year. Net profit was 10.729 billion yuan, up 10%, with earnings per share at 0.6138 yuan. A final dividend of 0.30796 yuan per share was proposed. By the end of December 2024, the company had 2.094 million tower sites, up 48,000 from 2023, and 3.544 million operator tower tenants, up 120,000 from 2023. Earnings reminders: Xiaomi, China Unicom, Xpeng Motors, China Resources Beer, and GTS Holdings will release the results today. US stocks rebounded for two consecutive days, though retail sales and manufacturing data both fell far short of expectations, signaling economic weakness. This likely bolstered market expectations for rate cuts, while investors also digested comments from President Trump and officials. Trump announced upcoming discussions with Russian President Putin regarding the Russia-Ukraine conflict. US Treasury Secretary Bessent stated he is not concerned about the recent stock market pullback, suggesting the government is unlikely to introduce stimulus measures. The Dow Jones Industrial Average closed up 353 points, a 0.85% gain at 41,841. The S&P 500 rose 36 points, up 0.64% to 5,675. And the Nasdaq gained 54 points, up 0.3% to 17,808. The Magnificent Seven Tech Giants Index fell by about 0.8%. Tesla bucked the trend with a 4.8% drop. Nvidia declined 1.8% as markets awaited CEO Jensen Huang's Tuesday speech. Amazon fell 1.1%, Alphabet dropped 0.7%, Meta slipped 0.4%, while Microsoft edged up 0.04% and Apple rose 0.2%. Some individual tech stocks performed strongly, with Netflix, AMD, and Oracle each rising over 3%. The Nasdaq Golden Dragon Index, which tracks Chinese concept stocks, surged 4%, hitting its highest level since February 2022. Baidu and Alibaba soared 9% and 4.6% respectively, while JD.com also rose 4.8%. Hang Seng Index Night Futures closed at 24,693, a premium of 547 points above the HSI's daytime close. On the economic data front, US retail sales in February grew 0.2% month over month, rebounding from a revised 1.2% decline in January, but well below the expected 0.6% increase. The New York State Manufacturing Activity Index for March plummeted 26 points to minus 20, the lowest since May 2023, far underperforming the market's expectation of minus 0.75. Both new orders and shipments declined, with the new orders index falling to minus 14.9 and the shipments index dropping to minus 8.5. Additionally, the latest data from the Philadelphia Federal Reserve showed the U.S. job switching rate falling to its lowest level in nearly 4 years, indicating a slowing labor market. Our stock pick today is 361 Degrees, stock code 1361. 361 Degrees positions its brand around professionalism, usefulness, and internationalization, continuously optimizing its brand resource allocation. The group has increased investments in professional sports categories, building a multi-layered and diversified efficient brand resource matrix to further enhance its professional image. At the same time, the group has focused on the rapidly emerging outdoor sector, diligently developing a series of outdoor products that combined functionality and technology. These innovative products achieve breakthroughs in materials and design, integrating cutting-edge sports technology to meet young consumers' due demands for performance and fashion. Through this strategic layout, the group has further strengthened its youthful brand positioning. Additionally, the group targets the growth stages of children and teenagers, ramping up R&D investments to comprehensively improve the professional functionality, health technology, and playful fashion appeal of children's sports products. It has expanded its product line to cover consumers up to 16 years old, better addressing sports needs across more growth stages. In terms of channel development, the group continues to enhance the efficiency of its offline sales network, consolidating competitiveness through refined layouts and premium services. As of 2024, the 361 Degree brand operates 5,750 stores in China, with the average store size increasing to 149 square meters, up 11 square meters from the end of 2023. The proportion of department store and supermarket channels has steadily risen, with the first 10th generation image store and the first flagship store successfully launched demonstrating the brand's ability to expand into diverse consumption scenarios. Meanwhile, the group has actively embraced digital transformation, deepening its e-commerce strategy. Through innovative operational models and precise marketing strategies, it has fully unleashed the potential of its e-commerce platforms, achieving standout performances during various festive events and realizing breakthroughs in both sales and influence. The group has also made milestone progress in its overseas sales channels. It currently operates 1,365 offline sales outlets outside mainland China, covering regions such as the Americas, Europe, and Belt and Road countries. Additionally, its overseas e-commerce platform has officially launched, marking a critical step in the integrated online-offline development of the brand in international markets. In January this year, the group successfully opened its first overseas directly operated store in Kuala Lumpur, Malaysia, further advancing its internationalization